Hello traders. So in the ongoing saga of the start to finish trades, this is the SPX butterfly with a long call trade that I started back on September 13th. So I titled the last one Buckle Up Buttercup. Well, this is going to be Buckle Up Buttercup Part 2. So this trade has had a lot of adjustments in it, and if you don't follow all of these, if they don't all make sense to you, don't worry. The stuff I'm sharing here is stuff that I didn't comprehend for a couple years into my trading career. I mean, I learned about putting on an options trade, taking off an options trade, but getting into adjusting them, and particularly adjusting them at this level, it's high level stuff. So make sure that you go to the link below and look at the prior adjustments that have been made in this trade. And I think this is the 5th adjustment, if I'm not mistaken. So normally when I put on these trades, I put on a butterfly with a long call. I would say 60% of the time I'm just thinning those trades out, peeling the butterflies off and locking in profits on those, and probably 60% of the time I don't adjust them. I don't need to chase the market one direction or another. But in this particular case, this trade was put on September 13th, so right here, and our market went up to 4,510, somewhere in that general range, and then it went as low as 4,240. So that's a 200 and some odd point drop during the duration of this trade. Now, butterflies are a very forgiving trade. That's why it's kind of my favorite trade to do as an income trader. But a butterfly also takes a lot of heat in this type of environment. So before I get into all the different adjustments that I've made in this trade, I just want you to take another look at this drop. Again, massive drop, 45.10 down to, almost 42.10. So that would have been, close to a 300-point drop, certainly a 250-point drop during the duration of this trade. So keep that in mind, and that's all happened within, a week and a half, 2 weeks time frame or so here. Now, let's go look at the various iterations of this trade from start to where it's at now. So what I'm going to show you here is I'm going to show you the different, again, iterations of this trade. So when this trade was very first put on, it was put on as a butterfly with a long call, and our market was right up here in around the 4,500 range. So if the market had stayed in this general vicinity, this trade would be up nicely at this point. However, we're all the way down here. So if I never adjusted this trade, if I put this trade on and I never adjusted it, this trade would currently be down $9,500. However, after a first week or so in this trade, I had made an adjustment to the trade. So again, this was the initial configuration. It was this butterfly and one long call. Well, as the market started to sell off a little bit, one of the moves that I made was I had an opportunity to take some profit. So I closed out 5 of my 30 butterflies, essentially reducing my risk and locking in a little profit. So I did that literally in 2 days time frame. And that's the normal move that I go through on these, is I just thin it, and then when I get more profit in there, I thin it a little more. When more profit comes in, I thin it a little more. Now again, had I done nothing to this trade after thinning out 5 butterflies, with the market currently down here, I would be down about $8,300. Not as much as the $9,000 when I had the full load of butterflies, but because I thinned 5 of them out here for some profit early on, then when the market sold off, I wasn't carrying as many butterflies. I was only carrying 25 instead of 30, so my loss would not be as large. Also, you need to notice that my theta is a negative 175. So in other words, this trade, to keep this trade on in this configuration right now, if that were my trade as it existed, I would be paying approximately $175 a day through theta decay on this trade. So this line here would keep going lower and lower and lower and lower each day that passed by. And again, I'd currently be down about 8,300 in this trade. But as the market started to sell off, I had adjusted this trade further. Here, the adjustment, which we did on the 19th, was a fairly simple adjustment, and that simple adjustment was selling off my long call. As the market was selling off down into here, by selling off that long call, it reduced my risk in this trade a little bit. It raised this right wing just a little bit, and it improved my theta in the trade just a little bit. And you can see, had I carried this configuration, which is a butterfly that was thinned from 30 butterflies down to 25 butterflies, it also, I had sold the long call that went with it. So after those two adjustments, if I carried this to today, I would be down around $5,900. Wouldn't be down quite as much, but again, still down quite a bit of money. So you can see each step of the way here, the benefit of having made an adjustment. Now, again, that's if the market were all the way down here, which is where it is today. If the market were up in here, some of these adjustments would not have needed to have been made. A few days later, our market continued down much harder at this point. And at that point, I ended up turning this trade into this configuration through selling a condor. And you'll be able to, again, go to prior videos on this particular series of start to finish, and you'll see where I walked through that adjustment, where basically I thinned out the upper side of this trade. Actually, it was this side right here. And I added this put spread in here. That's what turned this from a butterfly configuration into kind of a weird combination of a butterfly and a condor. Now, the goal with this was to, at the time that I did this, the market was trading right around in here at 43.50. So that was kind of why I made this at that point. That gave me positive theta, and I'm positive theta even still right here, to the tune of $300-400 a day. At that point, this trade is bringing in theoretical numbers of $300 to $400 a day in theta decay, all else being equal. So at least the trade is working in my favor again. I've got theta decay or time on my side instead of working against me. So this is where this trade has been the last few days. Now, one of the questions, we looked at this trade, or if you were looking at this trade a few days ago when the market was down here in, I don't know, I think it was down, somewhere around in this general range. This trade was down about $4,000 a couple days ago. And a logical question would be, why didn't I further adjust this trade then? Well, the answer to that question really goes back to looking at a chart. And if we take a look at a chart, and I'd urge you to also go take a look at I did a session that I recorded on my market analysis or my market assessment that was dated September 27th, yesterday. And you'll see in that market assessment that I was anticipating a market bounce, a change in direction at this particular, at this general location. My expectations, and again, I'm not going to get into all that here, but I urge you to go take a look at that video, was that there would likely be a bounce, partially because of this trend line that's intact, partially because we have a 200-day moving average that's getting close, partially because we had a lot of prior support in this general area, partially because the reason the market's selling off is this whole debt ceiling issue, and people psychologically start to accept that it's going to happen at some point. So again, I cover all that in the prior video, so go take a look at my market expectation of 927 and you'll get the full details on what my personal opinion was and personal thoughts at that time. And for those reasons, I did not end up making a further adjustment in this trade. So if we come back to this right now, again, we were down in here a couple days ago. Trade was down quite a bit more, and I chose not to adjust it because I was anticipating that there might be a little bit of a rebound. We did, in fact, get a little bit of a rebound here today, and at today's close of market, this trade was only down about $400, somewhere in that general vicinity. Now, I am interested in adjusting this trade at this point because I don't know from here if the market's going to go higher or if the market is going to maybe fall back. But you can see if the market goes higher here, I've got quite a bit of risk because of this massive spread on this side. Now that's a long ways away. That's all the way up here at 4,500 or so, which I think it's unrealistic to think that we're going to rally 200 points in a short amount of time. That said, I want to reduce that risk. I don't want to carry that much risk to the upside just in case. Also, I'd like to maybe reduce my downside risk. My downside risk right now in this trade is about $24,000. So I'd like to reduce that a little bit too. So what I did today was I put out an order, a condor order, to essentially thin 5 of this spread out and 5 of this spread out, which is going to raise my risk line from here up a little bit. It's going to raise my risk line from here up a little bit, actually up quite a bit on this side because this is a much wider spread. So that's the move that I made today, and the position now looks like this. So you can see that on this side, let me just come back here one. On this side, I was carrying 52,000 in risk. On the downside, I was carrying about 24,000 in risk. After thinning those out, now I'm carrying about 36 to the upside, 37, and I'm carrying about 17 to the downside. So basically, by stripping out some of these spreads here and some of these spreads here, I stripped 5 of them out from here, I stripped 5 of them out from here. What that does for me is it reduces my risk on both sides. Now, it also reduced my theta decay because I thinned this position out. I'm not going to have as much theta working for me. So you can see in my current configuration, I have $240 in theta a day. Here I had $388 in theta a day. Here I was positive 40 delta, which means that I'll do well if the market goes up. I'm not going to do so good if the market comes down. I'd like to level that out a little bit too. Here I thinned that a little bit. So I'm still positive 37 delta, but my theta again is not nearly as it's not bringing in nearly as much. It was cut by about a third. But in exchange for that, again, I've greatly reduced my downside risk. I've reduced my upside risk. This trade, I'm now comfortable letting it breathe here a little more, letting time decay. So what happens when that time decays is, you can see right here, right now, I'm down 371. So one question is, I guess it's showing 430 up here. So why is this 430 different than this 580? Well, it's because of the fills I got. I got good fills on that particular condor that I stripped this out. So those good fills actually made this look a little bit better, and it happened prior to the end of the day. It happened just a few minutes before the close of the market. So as the market rallied into the close, it looked a little better after that adjustment as well. But what I want to show you now is kind of what's going to happen with theta. You can see where over time this is going to continue to mound up here. So my goal, my objective is if this trade stays right where it is, if the market stays right where it is and does not go up at all from here, well, you know, in another couple weeks, I'm going to be about break even on the trade. But I am still of the opinion that right now our market is more likely to go up from here than it is down. I feel like the fear of a government shutdown has been baked into the market. If that extends, if we get 2 weeks into this and there's still no resolution and our military, our soldiers are not getting paid, things like that, which I think is just deplorable. But if that is the case, you know, the market could sell off. But I'm thinking that for the most part, some sort of resolution will likely come into play. And obviously, I'm essentially betting on that. That's my expectation. And that we'll get a little bit of a rally out of this. So ultimately, my plan for this trade is I think in the next week or two, our market is going to be somewhere between probably 43.25, maybe up to 4,400, and this trade will have decayed a little bit more at that time. And when that happens, I'm going to come in and I'm going to strip out more of these verticals, and I'll strip out more of these verticals, reducing risk on both sides and locking in some of those profits as I go. So again, this is a very complicated trade with a lot of moving parts. So if you don't get this, if you're looking at this saying, I don't understand, please don't worry about it. After you study more about options, how options move, how adjustments come into play, then you might want to come back and replay this. Or if you've traded butterflies or condors before, this may be perfectly fine to you and you're getting all of this. But again, my goal in showing start to finish trades, generally speaking, is it's pretty easy. You put them on, you start to thin them out, you close them out, done deal. You're getting an entire detailed class in this one trade with the down adjustments that we're making. Now, had the market ripped up, there's a different series of adjustments, and I have modeled out over time probably about 6 or 7 down adjustments that I like, and probably 5 or 6 upside adjustments if the market rips out of my upside range. And over many months, possibly a year or two, I'm imagining most of those will play out through these different trades, but it will certainly take some time. But again, hopefully everyone at least appreciated the effort that is going into managing this trade, and hopefully the explanation I've tried to give to help people understand it. As always, please like, subscribe, give me a comment, let me know that this is helpful, or this is above your head for right now, but you hope to comprehend it at some point. I know that was me my first year or so of trading options until I got some good education on these things and really started to kind of learn how things move. And I got that education, by the way, by watching other traders doing exactly what I'm doing here, going in and actually making a live trade. This is a live trade in my account, and watching me adjust through that process, or back in the day, me watching them adjust through those processes, making lots of notes, going in and modeling things myself, using a software like OptionStrat, where I can go in and play a lot of what ifs and just kind of see how those play out over time. So, all that said, this trade is now done. I'm going to save, not done. This last adjustment has been done. I am going to save this. We had one condor. We thinned our condor today, and I came in and I already added the note here that I thinned the position on this rally day by taking out a condor and reducing risk, and I'll just overwrite that existing trade, and I will copy this link. I'll share it in the notes down below as well. So thank you so much, everyone. Take care.